Hey everybody, let's get started for a Monday. Thank you, thank you, thank you. How's everybody doing? Get it started here. There you go, great. Quick shout out to everybody in the chat. Pretty nice Super Bowl last night, although I think the Bengals were robbed a little bit. A couple of questionable calls. Who knows? Of course, the spread was 4.5, so they won by 3. Yes, yes, disclaimer and all of that. We'll talk about that. Get the disclaimer, terms of use, but really disclaimer. Why the disclaimer? Because this is entertainment that hope you find educational, and in the United States, we do not offer financial advice. We just offer entertainment talking about financial markets. We do harmonic patterns here 3 days a week, Monday, Tuesday, Thursday, usually 11 or 11:30. Today's 12:15. It's been busy. But let's get right to it. Featuring Ethereum, the type 1 reaction's over, and I posted something on Twitter yesterday, earlier this morning. Um, Pretty nice standard type 1 framework. There's target 1, 28.48. We triggered harmonic strength index. So here you go for the week. At least that sets us up on the 4 hour to come back for the type 2. Appreciate it. So that's so far so good for crypto. A couple of key things to be looking for in these type of situations. One, did we hit the target? In this case, we did. Took a little bit extra time. Did we have an HSI trigger? Um, Preferably, I would like to see this a little bit beyond target 1, but it's so close. The trigger for HSI, to be exact, was at 28.60. Target 1 minimum's 28.48. We'll see if this is the end of the true end of the type 1 reaction. What you would want to see is a continuation now back up to retest the PRZ, the XA level. Remember this from last week. Again, coming off the low. I think Ethereum's reaction, or its rally off of the low from the 24th of January up to February 10th was more impressive than Bitcoin. And it's certainly adhering to the levels a bit nicer, a little tighter than Bitcoin is at the moment. So probably one to watch. Let's take a quick look at Bitcoin. Similar situation in Bitcoin, but it did not get to the target 1 level. Here's the bat pattern, and actually for most of the Bitcoin pairs that we see, doesn't matter what the data exchange is, the software is picking this up as an alternate bat. The 886, you really can take your pick of what you want to grab here. There's a few different things to consider, but essentially 45,000 should be the cap of the maximum, at least for some kind of bat formation. Definitely. Big shout out to everybody in the chat. To you too, James. What's going on, Mr. Lodak? What's going on? I need to connect with some of you guys to maybe just kind of get a little admin help. I saw you guys did some great admin work over on Mitch's channel a few nights ago. Anyway, hope everybody's doing well. Hope you had a good weekend. And we'll see how things shape up this week, because certainly last week There was a lot of fireworks, crude oil, the markets, and I don't think it's going to stop. We're here now. Think about it this way, folks. Just to really quick take a quick second and just say, today's the 14th. Happy Valentine's Day. Big shout out to my wife. Happy Valentine's Day. I have to say it. And hope everyone also celebrates this amazing holiday brought to you by Hallmark. So we'll be here Monday and Tuesday and then Thursday. But next week, we've got a holiday, President's Day weekend coming up. So next Monday's off. I would think a lot's going to be jammed into this week, is my point. So I would also consider it like this. Let's see how we finish up Friday. And then I want to think about the rest of the quarter. Where are we going to be come April 1st, first week of April, or even, end of March? Because we're going to pretty much see this market get split up into two segments. First 6 weeks and then the second 6 weeks. I don't think we will be anywhere close to where we are now 6 weeks from now. And that could be lower or higher. Absolutely. I think we're seeing the volatility. We're seeing things are heating up. So just be aware of kind of dates. We're halfway through the quarter. This is a critical week. I don't mean to overstate that. We've had a few critical weeks. This would be a critical week in terms of the entire correction that really began the beginning of January across the board. For crypto, it was an accelerated move. For the other markets, we see what's going on. Crypto, folks, I still contend that we want to see Bitcoin, Ethereum do their thing, hold their head, continue to go up, grind higher. Doesn't have to be spectacular. And then we can target things like this. Here's algo. Back-to-back patterns. Now we have a deep crab followed up by a bat. So I absolutely wouldn't want to be looking for altcoin reactions like this in this environment and trade those. I've been saying that all along. But that's one I posted recently. Another one, Cardano actually signaled. It triggered on the 1 hour time frame. There you go. A couple of bat patterns. Here we are back at the $1 level, threatening the $1 level. I'm looking for a reaction off of this. One more. Take a look at Polkadot. Okay, because this is another one was beat up in the last 2 months and is starting to stabilize. Look at that beautiful hourly bat pattern down at the hop level. The bat pattern here is not, the automated algorithms are kicking out this signal off of this prior low here. Of course, if you just manually look at it, yes, you can consider this where the prior low from early February is something you would want to consider. But even in this instance, no matter what, you would still look at the hop level where the confirmation comes into play. The other thing to look at if you're going to manually draw Polkadot here is a shark setup where 886 and your 1618 both come into play at around 1850. A number of these, folks, are setting up like this right now. and we would just anticipate a target one reaction. 2060 is the minimum level, target one level, and we would still use that level no matter what. Stick with the automated levels. But that is more of the kind of opportunities I'm still looking for in this environment as Bitcoin and Ethereum go through type 1 reaction, type 2 return now, and then we'll see if they do a reversal later in the week. Really quick, the total crypto market cap deserves a quick peek. Here's the total crypto market cap. Interesting, I did want to take a side note and mention that several people have commented that the new algorithms and the update with harmonic pattern collection for TradingView has been demonstrative, noticeable. And so that is really a great sign. For me, I am seeing more patterns. Now, one of the kind of the issues you may question is say, well, if I have multiple patterns, which ones do I know? Which one do I favor? For example, the total crypto market cap is now kicking out this bat pattern off of the top on the hourly chart where you pull off of two prior lows. And it's not really an ideal formation where you're generating the bat structure off of an extreme low, but you do have the XABCD connect the dot components where the overall 886 level, corresponding hop level, somewhere around the 1.8 trillion level support is the obvious zones to pay attention to. Anything below 1.8, especially if we roll over and violate the current lows, would trigger the larger correction down. For now, it's still okay. On the 4-hour chart, I think this is even more telling, where we have almost a perfect type 1 reaction. And this is probably the one to be focused on for the next several days. We had a really nice, like we saw in Ethereum and Bitcoin, we had a bat pattern in the total crypto market cap. But now we have a bullish pattern retesting target 1. And it is another situation here on total crypto market cap where it was 1.806 trillion. Really, it was 1.802. And we got to 1.81. By definition, hasn't officially hit the target 1 objective that would say this reaction is over, but it's very close. So keep an eye on it. With the bat pattern, I mean, we do have a look, beautiful bat off of that prior swing. Completed, triggered HSI about 2 bars after the fact, and have consolidated going sideways, but at least you're not going down, trying to stabilize. This is potentially a setup where you would want to see this, if it can come down and hit target 1 at 1.8 and then maybe kiss it and then go back up, or maybe we just grind in a zone. But this 1.8 trillion, huge number for total crypto market cap. If crypto is going to start experiencing trouble again, where things are going to roll over in a significant way, it'll be under 1.8 trillion. That's the number to put in your head. That's the big support level, and of course with the other patterns doing what they're doing, you would want to see this come back and do the retest in the type 2 format. That would be your retest, but it might even be something where I don't want to get ahead of myself, but because I don't like when people do this. A lot of times you'll see patterns that are drawn out. Well, people will trace out maybe 6 patterns, 6 steps ahead of time, assuming one pattern would form or another. But within the type 1, type 2 framework, I could still see this thing be range bound, do a type 1 reaction today. I mean, in the next 48 hours, and then retest, and then bounce around. A couple of zigzags as we at least resolve the bullish pattern, and we know that a larger potential reversal would come on the retest of the bat. Looks like that. There's your bat. Interesting to also note that total crypto market cap, the index, did not exceed the January 20 high, where many other larger cryptos, Bitcoin especially, took out some of that prior resistance. That's also something I'm looking at think about it from a monthly perspective, where this is your action. Essentially, this is the last 30 days. I'll take it back a little bit further, but your last 30-day range, folks, is a massive bat pattern. That's all it is. With everything that's the dramatic downfall early in the year and the recovery, we haven't taken out the swing 886. And so from a long-term perspective, do regard that. Do regard that is still going to weigh down on that trend until we can get out of this zone. You have to violate that pattern. That's the only way you can start to do something in terms of starting to increase the total crypto market cap. The other index that I've been paying attention to is the DeFi, because it was holding up. It was holding up better maybe a month ago. But now we're almost back to retesting the prior lows from January. And this would be, again, another area, another key index to be watching, the DeFi index, because we're going to get these signs early. If crypto is going to be a real problem between now and going into the end of the quarter, well, we're going to see it early. And this kind of reminds me of what Ethereum was doing back in December, when it really could not continue and then came back and just was doing small reactions, retesting support. In this case, we're at the October 886, also with an HSI signal. Looks like this. I mean, there's really not a bat pattern here because of this low. I mean, we could try to trace it out, something like that, but there's too much price action has unfolded. But your 886 is down at right there, about 112. And of course, a violation under these lows, under the January lows, would be a significant continuation, not only for the year, but against last year's last pivot support. Essentially, all of that since that first traded back in August, you really need to see this thing, that DeFi market cap, hold that level. That's the crypto story, because I'm still not going to see a large-scale appreciation in anything until these can hold and break out, move higher, crack some prior highs. If we can't get above the January peak, then again, We find ourselves at the end of this month, and we have not made progress above the bat pattern that we saw in Ethereum or Bitcoin. That really could be the make or break for the year. Here's XRP, folks. Despite the recent pullback, we had a big pop up. I'm looking for the weekly. What was it on Tether? Yeah, there you go. This we were talking about this a week ago, and did a big pop and came back. I'm still fine with this. And take a look at this. Definitely keep an eye on like the 4 hour time frame, even the hourly. We maybe get a pullback here where that would be it. Even if this is just grinding sideways, this is a place where I'm looking for opportunities on XRP for sure. There's probably just a matter of more time than anything else. Hold on one second. Hold on one moment. Right back. Thanks. Sorry about that. Anyway, one second. All right, I got it fixed. Sorry. I had to switch a couple things up here. I was having an issue with the sound. No, we're back now. But what I'm looking for, XRP, of more than probably most other large caps, is at least another bounce off of these levels here. We're back, we're retesting. Look for this thing to come back one more time. Hold on one second. I think I've got a problem. Guys, give me 2 minutes. I'm gonna be right back. Hold on. I have to switch out a headset. Yeah, I think I've got an issue with this headset. I'll be right back. Okay, I think let me do that. Yeah, I've got that OBS. Been trying to fix that sound, but um, look, until we get some major progress out of this, the Bitcoin or these total crypto indices, forget about it. Everything's going to be a brief reaction, and that's still tradable, but not much more than that. Now, larger markets, again, Nasdaq got crushed last week. It's all over the place today. Let's take a quick look at these major patterns. Here's S&P 500. This is the daily, and we're now looking at this retest for the type 2. It reversed pretty hard on Friday. Thursday it sealed the deal. Now we're looking for what could be that last retest of that pattern, where maybe that's the confirmation of the low. Maybe we come down as low as that hop level for the quarter in the next week or by the end of the month, and then that would start the type 2 return. Remember, probably the most critical measurement we're looking at is, or want to consider, is just this 1618 correction. I mean, we're in a correction, but from a harmonic perspective, we're in a 1618 off of that last move up to the peak beginning of the year. We went straight down, came back up. We hit the 5-0. Remember, there is a 5-0 pattern here at that 4510 level, so it would make sense for us to come back one more time, retest this support level before we could see some kind of recovery. We're officially in the return move, and I did mention this a week ago on the daily for S&P, that we hit the oversold complex structure. Your green line has turned on, so now we're looking for that consolidation phase to retest somewhere in the oversold one more time. Line up with your secondary test. This is where the larger possibility sits. That's what I want to pay real close attention to on the daily chart. Until then, we're going to be squeezed in this zone. The fact that we spent 7-8 days not able to get above 4,500 is critical. And there's other pivot points here preceding this where that 4,500 is stiff resistance for now, and it would be a lot better to come back and retest the prior lows going back to October and January and wash it out one more time. Why not? I mean, we really got hit last several days. It definitely, you saw, here's the 5-minute chart. That's a quite a move, and that's 200 S&P. And I would look at this as a very tradable market, but don't think that it's going to go, just because it's gone down a lot, will automatically go straight down. We'll get another pattern formation. Here's a great example. Even this is the kind of pattern I would be looking for if we want to see the next setup where S&P is going to go down and retest. Give me something like a 5-minute crab pattern, something like this, where it creates a real rush. A nice short-term 1618 extension. It gets overbought, and that just kicks off another corrective leg down. That could happen maybe later today. Maybe we get a 1618 off of this low, something like there, 45.50, and then down. Plenty of time in this market. Lots of opportunities. Go to the 233 tick for S&P. That's use that with 1 minute, 5 minute. There you go. Not much at the moment. A couple of nice day trade opportunities here, always with the 233 tick. And you can treat that independent almost of the trend because you're day trading. You're in and out within 10, 15 minutes. There's a beautiful bat, type 1 bat. There's type 1, type 2 crab. Look at that type 2 crab. This is the kind of thing, folks. Your S&P, beautiful deep crab, goes to target 1, bang, comes to the hop level. There's HSI, checks back, and then to target 2. That's something I think it's when you go to the smaller time frames and you need practice over and over again, that's a great way to see that phenomenon unfold. Let's go to Nasdaq quickly. Again, Nasdaq has taken the brunt of the selling. The software has been generating this larger crab pattern down at around 12,884. The 1618 extension. Notice how the October measured low, depending on your market, but that this October to December or November peak, whatever it was, in some cases it was January. It's becoming a really important measured leg. You know, the 1618 of that decline. We first looked at the 886, failed miserably right there. Now we're still in the development phase of the CD leg and should pretty much ride this trend line down to 12,884. That would be the that would coincide with the long-term monthly or even quarterly 236 level that I mentioned a while back. I think it's on my Twitter page. I'll find it, I'll retweet it, but it's, you know, your 236 level all time. It's that green bar around 12.9. That does make sense if things get really crazy. Let's say 14,000 completely fails in the next week. We need to consider lower levels. I think it's from a round level perspective, 14,000, 13,000. And then I will say this. I mentioned it last week. There's nothing under 12.8 or 12.5. So if we retrace to 12,800 on the Nasdaq, this is the NQ futures. You would want to see that absolutely hold and reverse, because then you get into some larger implications if you do not. Here's the quarterly chart. Look at the candle. We are threatening to close below a prior quarter for the first time since when? 2016, maybe? I mean, the prior low. This is something remarkable, actually, if you really look at this whole history of Nasdaq futures. So the last time that the Nasdaq quarterly futures closed below a prior quarterly low, the actual close was 2019, 2018 here, when they tried to raise rates. That was one time. 2014 was another. And then maybe 11. Doesn't happen very often. Here are the other two larger cases. Bear market in 08, and then of course the bear market in 01. The critical part of what we're seeing here is that's the trigger. What happens the next quarter? So we go into next month. If we close under 14,300, call it, really 14,400, and 14.4 is a big number, a big short-term number. That would trigger it, and then if you get a follow through June, July, August, and we find ourselves, continuing that trend, these are the things to think about going into the end of the, going further into the year. What could happen this entire year? A lot at stake. I just don't think it's. We looked at some charts in the Nasdaq last week, Facebook and Netflix and a few others that took a beating, and I do think they're going to need more time. There are a lot of people who are calling for a devastating bear market. I'm not there. I could see a real stealth correction, something that is, again, doesn't take a lot of time, but is cuts like a knife in terms of price. But we need to see. Here's the Dow. They're Dow Futures. And this is held up relatively well. There's two ways to look at this. You could say it's holding up relatively well, or it's not continuing higher. I think this is all about where the monthly close happens. If it do we get a bearish close on the Dow? Again, plant some numbers in your brain. Dow Jones Industrial under essentially 35,000 is the make or break. If we find ourselves, the Dow rallies back, we're above 35,000, that's fine. That's actually constructive. But Dow's under 35 or under 34, then you need to pay a little bit more attention, because I think in a longer term chart, the Dow really should not be flirting with the low 30,000s. The Dow should really hold this 33, 34,000 level longer term. If not, these are things to be looking for in case, say, interest rates get out of control and the market really does want to do some kind of correction. That's not as bad, again, I think, as Nasdaq. You look at the Dow Diamonds. That's another way to just kind of gauge how far this has come. We spent 6-7 months up here. We haven't made a lot of progress on the monthly time frame. Daily looks like it's just, going sideways, grinding. But plenty of time. Look, the diamonds could come to this 34,000. You're trading basically 34.6, 34.5 right now, and still be fine. The key here, and this is to really alleviate what's the nightmare scenario, because several people have been really pushing that crash narrative. Well, I think if you're going to have it, the breakdown's going to be obvious. There's going to be plenty of time to take advantage of it. I mean, we could say, oh, the uptrend was violated here, or maybe here. Regardless, if you think the uptrend's been violated, you need to see the breakdown, a rollover. I'm watching this sideways action, no doubt. I think, people are concerned. There are a lot of concerns and changes in the market that could influence the trend. For now, though, there's still a lot of work that would have to happen to then really warrant some kind of larger caution, where if you're going to say, oh, okay, this whole COVID rally is at stake, which is really the only argument, the bear argument that everyone really needs to consider, that if there is a major correction, it's just how much of the COVID rally are you going to give back? Is it going to be a 50% give back, or is it going to be an 88.6% of just the COVID gains? And that's a pretty easy way to think about it, but You haven't even broken down yet. So we'll take it as it comes. But those are to really help kind of support the larger framework of where are we within the long-term trend. So that is this a buying opportunity, or should I be selling the continuation? I did want to look at the TradingView platform for the SPY because we had big pattern there on the daily, weekly. Was it weekly? Oh, it was daily. And this did complete. There's our type 1 all the way back here. The type 2 completed, as we said, mentioned that over a week ago. But we have been faced with this HSI signal that is in a spot where it's usually a bearish continuation trigger. Certainly, this defines that 45.50, as I've been saying, for the SPY and for a lot of the indices, where if you're going to have this breakdown, if you're going to entertain that breakdown scenario, it has to be here and it cannot take out these prior areas of resistance. For the SPY, I think you have a lot behind it where you'll know. Take out this prior low at under 420 level or the HSI signal at 427, then you get a larger continuation. There are many patterns there. I mean, no doubt. There are many patterns across the board that have shaped up, but I think, the larger consequence of is this type 2 reaction, is this type 2 reversal going to lead to something greater? Or is this it? Because there's HSI. HSI did trigger off of this type 2 reversal. By definition, keep an eye on it. Those are the key markets. I think the major indice ETFs are showing you where they are within the framework. And then again, if it's going to be a breakdown, it's going to happen under here, and that's going to trigger something much larger. So don't worry about it. Plenty of time. This software looks like the old version. No, this has been updated. Actually, really quick, thanks for the comment, and a couple people saying that they have really like the updates. If you need to get the update for the software, just simply sign out, okay, and sign back in, and it'll be automatically loaded. Maybe I'm missing, oh, you know what? I could be missing a module. I only have 6 modules here. MW regular, MW large. I'm missing an ABCD module. Actually, I'm missing 2 because for the TradingView platform, folks, we install small, medium, small, regular, and large. These are for your pattern sizes. For ABCD, that's 1, because ABCD has shark in it and ABCD, and then the M and W is crab and butterfly, stuff like that. I'm missing an ABCD though. Let me add that back in. Yep. Yeah, it's in the invite only. And click ABCD. There you go. So that gets me the 3 types of ABCD pattern. Now I want to be small. There you go. Take that out. Yeah, I think the shark, well, the shark is in here. The shark is in the ABCD module. So ABCD, check it out. You have your bullish and bearish, and you have the shark. I do think the 5.0 is going to be something we're going to be able to bring into there. soon. Also, I know a lot of people are asking about how to show more pending patterns. And I agree because there are some issues with the Pine script and our ability to actually project out to the right of the chart completed patterns or as they're completing. That's something where the we might get say 4 of the 5 pattern segments, but because of the way the Pine script is set, we're not able to project it in a way that's set to the right of the chart. It don't really have a pattern here, but let's just say this was some kind of pattern here. I don't, the Pine script, the auto generated, it does not allow us to project that out. That's one of the limitations with the pending. But I do think we can improve that even on the scanner basis to alert sooner. Now, one other thought, okay, regards to the pending pattern. So people are requesting, hey, can we see pending patterns? Because here's a crab pattern for the SPY, for example, and let's say it's got the 4 of the 5 legs. It's got your X, A, B, C, and then you start to form the C to D leg. Well, at what point is it a valid crab pattern? Because even if you're looking at that manually, your C point takes off, and remember we exploded in October. We took out the B point, but then where does it go? Does it go to the 886 or 1618? And remember, the way that this lined up, it was not a valid Gartley and was favoring the crab formation. The other thing to take note of is how many bars this grinds and goes higher and does in a dramatic fashion. I mean, that's acceleration, no doubt. Bar over bar, continuing higher high, higher lows. But the software might not kick out the match until literally terminal bar, or you might see some pending zone be illustrated when it hits the levels. Now, I agree with that. It's something, maybe if it signaled earlier for your type 1s, could be a little better, a little easier. But here's the consideration. You're usually going to get a few bars in that zone. If it's a daily, you're talking a couple sessions. If it's a 4 hour or hourly, you could be in there for 4, 6, 10 hours. Not to mention the type 1, type 2 framework, where some of the best opportunities are actually coming after, well after. We get the completion, we get the reaction. And then the retest is where from this zone, XA, between XA and HOP down to target 2, is the more sizable opportunities. So just consider that as well, where pending patterns are great and they're helpful, but we still want to be dealing with completed patterns, knowing that the major moves are going to happen after the fact. Yes, you can get alerts on pattern completions. And go to, that's a trading view. It's in the trading view manual. And go there and select on alerts. Add your alert there. Add the alert and then add the condition, which is going to be your M or W. But one thing I'm working on, folks, is because the problem with that is you have to select, is it MW large, small? So you're only going to capture on that alert 1 of the 6. You're going to have to set for each one. Trying to combine that. Again, there's limitations with this Pine script where it's the best we can do for now. A couple of more. Let's jump over quickly to the other platform, Quick look at crude oil. Huge move up on Friday for the obvious reasons. It's just a matter of $100. A matter of time before $100 gets hit. And I think Friday was a sizable, just huge rally late in the session. Big weekly close that actually was able to penetrate above the prior weekly high. And here we go again. Just day over day, week over week, that is remarkably strong. And I show you this weekly chart on the continuous futures of crude oil to say, remember that crab pattern I was showing you on the prior chart of SPY back from October? Remember this similar behavior. Remember we were looking at this segment from October, and that's just a sizable, steady continuation, especially after you break out of your B point and your prior X point. You go to a 1618. That's what I think we're looking at with crude oil in the weekly. No matter how far this goes on the long term, which people are starting to wake up to the possibility this could go to all-time new highs, or at least retest the all-time new highs at 150. I think your weekly level right now, folks, you're going to hit minimum 1618, but probably do an overshoot of that 1618, and the psychological run of the $100 level, I think makes it pretty simple. I think people would be kind of feeding on that as a self-fulfilling prophecy. Yeah, the 1618, it's at 99.50, 99.60 of this weekly move. 99.65, and let's say we get an overshoot move. This is just the weekly extension of the last correction from back from October. And I wouldn't be surprised to see, say, a 224 move. Get you up to what? 110, 113. Or even just a 2.0 move. These are, I don't think these are really a stretch. The 2.0 extension of this last rally, which has not taken out a prior week's low in 12 weeks, 3 months. I mean, this is the start of a major continuation leg. Just take a look at the first 10, 12 bars. That kind of continuation leads to something that usually capitulates much higher. You're trading 94 and change. I'm going to say, 100 easy, more like 110, 108.40. No matter what, against the backdrop of the other markets and crude oil, we saw natural gas. Natural gas is all over the place, folks. It's a I'm not going to say manipulated market. I'm going to say it's controlled by some heavies, and it's thin. When it's not active, it's thin, so it can get moved. And they call it the widowmaker market because it has made many a people feel extreme pain. Here's the big thing on nat gas. We are just retesting. We came back. Look, we hit the XA level. This is what we talked about last week. 391. That's it. Type 2. Ready to go. Where's HSI? Are we down there yet? No. This is all about trying to make $4 the basement. In the same way that 240, 250 was, this 380, 390 level is the last dip before the next leg back to 5 to 6, if not new highs. And it's doing so in an ideal fashion where you get a reaction. And it's a high level bat pattern right off of that extreme move up to 650. Okay, take your time, break out of the downtrend. Also, retest the pattern to the right of that downtrend. That's a nice technique where the pattern forms, market stabilizes, price action stabilizes. It goes through some consolidation and then triggers the true breakout move to the right of that downtrend, where the larger uptrend takes over. You know, you're looking more something like this. You know, go back to the all-time low. You know, just ready for the next move. Ready to go. You know, next leg for this, for nat gas. Come back and hit these targets. I think, you know, 750, 670 area makes a lot of sense. Certainly this $5 stuff, the fact that you're not above $5 is remarkable. I think that's artificial in the same way that gold should be above 2,000, nat gas should be above $5. I would look at UNG on these retests. Here's UNG. That's the nat gas ETF. That's a great way to play it. It's probably, you know, a better way to play it than even Boyle, because Boyle is so crazy volatile. I think you can play nat gas because through this ETF, because what we're seeing is the development of a whole new bullish cycle, without a doubt. And UNG, if we're down here in the low teens, we were talking about it since 8, but somewhere around 12, 14, this is something where, I was talking about this last week, static resistance is still above 20 without a doubt. And if it really gets going, you go to some recent history, pivot points around 35 or 40 bucks. That's where the longer term resistance sits. And that's the long term play for nat gas. So if you don't like the volatility, or better yet, if you want to diversify your nat gas plays, UNG's a nice vehicle. It's going to be slow. It's going to take time, and you know, maybe 2 years, maybe 18 months, but 35, 36, I don't. That's not crazy talk. And that's in a scenario where nat gas goes to, oh, I don't know, 7, 650 or 7. I certainly think that the days under 5, and we're under 4, or we just were. I think it's just dramatically oversold, and it's going to, you know, find value. There you go. There's the monthly chart. There's your monthly chart. I mean, this last 10 years, not much. Doesn't look like much. So keep an eye. That's UNG. Hasn't been a great market until recently, since nat gas has bottomed. Keep an eye on that. Look, I feel the same way about natural gas that I did a year ago. It's going to take time, and when it does a huge move, we're going to take profits on it, but hold some for the longer term. Here's the Boyle move, where Boyle was at 60 and then slammed back to 30 in a week. Just be aware of it. It's that kind of a vehicle. Here's the daily on it. I still think that Boyle will make a run back up to retest recent highs. I think 65, 70 bucks. Let me me fix that. There you go. There's the big pattern for oil. And we're scraping the lows here at around 30. It's a Gartley, but target 2 at 77. That's the plan. That is the plan for Boyle. Real sloppy. We had a huge move up. I know a lot of people did not take profits, and some have sat on this. You'll get a chance. Maybe add another whatever percent to it, and let's look for target 2 on Boyle. Keep an eye on it. There's a lot of noise at the moment, but what I do think people need to consider as well is the end of the noise is almost here. One way or another, before the end of the quarter, all the nonsense that's been going on, whether they're going to raise rates, whether you're going to have geopolitical nonsense, you're going to know, and it's going to be reflected in what's happening. So that uncertainty will get taken out once we get past that. If this inflation thing is going to really surge, we're going to know. We're going to know before the end of the quarter. I think before the end of the month, it's going to be really clear. Like if we're going to book another 7.5% year over year inflation on the monthly CPI, then it's just this is going to be a persistent trend most of the year that probably does not end well. Double click for auto zoom on the right on the price axis for the auto zoom. Oh, I see what you're saying. Yeah. So I'm still favoring that. Those are some of the plays that we've seen and that are working out. Crude oil, energy, nat gas. I do think that you want a really safe play on natural gas, look at LNG. And just look for this to come just accumulate on pullbacks. Okay, let this thing pull back. I mean, there's the last couple months. Try to get some perspective on LNG here. Let it pull back, 10% pullbacks every time, and keep adding to it. Because the whole energy thing it's a multi-year play, no doubt. I mean, look at this just amazing chart the last 2 years. But that's a steady uptrend, and there aren't too many that are really exhibiting strong uptrends like this in the face of current rate scenario. There's your weekly chart. Look at that. One or two more. I did want to show XLE, Energy ETF on the weekly. This is made a lot of progress. It was a perfect type 2 crab. The thing that I want to talk about is the same with a lot of the major oil integrateds. They're retesting important 886 levels, multi-year 886s. And we're going to see how strong this trend is. If XLE does some strong breakout behavior up here against, say, 76, 78, there's nothing going to stop it. This is probably the last instrument that has yet to break out of multi-year highs. That being 2018 for energy, folks. That was the last true distinct pivot high, where if this is going to be more than a long-term reaction, we're going to break out. It's got to go through that prior peak. We've done it on crude oil. We've done it on a number of energy markets. This XLE, if it breaks out above that 76, 77 area, that would be the sign for a much larger continuation this year. And that is the thing about crude oil. Historically, if it's going to do a move, it gets concentrated within a year, 2 years maybe. Big gains. And it's common to see crude oil go from worst performing sector to best performing sector, which it did 2 years ago. So I think that's what I have for today, folks. Let's get back to it tomorrow. Bring your crypto tomorrow. Let's really dive deep crypto tomorrow. I have a couple other things. Um, got a late start today, but tomorrow we'll be back more like 11:30, and just kind of leave everybody with a quick rundown. Where are we with? Where's the markets? Markets are down. Oh, markets up 85. Look for. There you go. Let me bring this back up. Let me show Nasdaq futures here. Here's 5 minute. Again, let's look for some kind of crab pattern. I mentioned that on the S&P. I still say that the long term and what we want to consider before tomorrow is some type of relief rally, but just be like a 1618 and then back down. Go to, let me show the S&P. Here's S&P. Yeah, this might be failing. All right, we just registered bearish HSI on the 5 minute at around 44.20. See, this is the thing with even just looking at the price action of the last couple of sessions, not able to get above any prior peak. Even this morning's reactive rally, we came off the lows, the pre-market. They tried to sell it, but we're not breaking out, and clearly still in a downtrend. But that's Friday's peak. There's your early pre-market. We try to retest it now, and we just formed a 5 minute HSI. That's what I'm a little concerned about it. Even though you're up a little bit today on S&P and the Dow. I think we're still in continuation mode to the downside. So look for your longs to be reactive, and look for, we'd love to see a nice 5 minute bearish pattern on the S&P. The last couple, just going back the last 2-3 sessions, look, that bat pattern, this crab pattern. Maybe we got another bat. Maybe there's something there on like a 1 minute time frame. But if I wanted to capture something where this does not, like let's say this is going to sell off miserably into the close, which I think it could. I'm looking for patterns like this. I'm looking for, here you go, it's a 1 minute. I wish it was a 5 minute, but you have a couple of patterns, deep crab, prior Gartley, all of this congregating around 44.20. What about the Nasdaq on the 1 minute chart? Because these could go negative on the day, and then those are some of your best setups. When it struggles, it rallies a nominal 80, 100 points on Nasdaq and then rolls over. This is a bat pattern on the 1 minute, but it's selling off. I do think this is what the play for. I don't know, you got this crazy meeting today, and you've got a whole bunch of nonsense noise where there's nothing constructive yet, folks. So I'm still looking at all intraday action relative, again, to these big daily patterns that are still wanting to point lower. Nasdaq and then S&P even is, I think, for the shark that we have for the S&P, if you're looking for a market to follow, so we have an idea of where equities are going to go, follow the shark. Follow this shark, the type 2 continuation, just day over day. We'll come back tomorrow. We'll see how far we've progressed, but this type 2, The fact that we are in a type 2, our type 1 reaction completed at the beginning of the month. We did a couple of days sideways. Now we're doing the return. And until that's retested, that's how you have to favor the longer trend. And so we'll come back tomorrow and see where we are relative to that. But I got to see this come down to hit that 1618 minimum. If not, terminal bar around 4212. You're at 4400 at the moment, folks. It might take all week, but I wouldn't be surprised to see this thing maybe before the holiday. By Friday, yeah, this could be what we're dealing with. So do keep an eye on S&P specifically. We'll look at crypto tomorrow. All right, definitely. We'll look at crypto in a big way tomorrow. Come on back. It'll be 11:30. All right. Thanks for your patience today. Again, you have any questions? Get with me over at Harmonic Trader. I'm happy to say sorry we had that the site was down for 2 days last week, but it should be taken care of now. So go to harmonictrader.com, become a basic member, and reach out to me on the Discord if you have any other questions. Thanks again, everybody. We'll be back tomorrow.